good afternoon, good evening. No clue whatsoever what time you're watching this, but for me, it is 4:44 in the morning on Monday. It is 4:44 in the afternoon over there on the East Coast in the United States. And what I'm showing you here is weekend Wall Street. Not something that you can really rely on for your life, but it's giving you at least a little bit of a glimmer as to what futures are going to look like in an hour and 15 minutes, which it'll take me that long to put the video together and upload it and send the email out. So futures are going to be open anyway, so I am even wasting my time. But with all the discussion that's happening over the weekend on the civil war that's about to break out over in the UK, which the UK was essentially at all-time highs on Friday. With what's going on over in Israel about this discussion of 5 countries all conglomerating together to wipe Israel off the map, which, listen, okay, it's been a sensitive subject in the past in the chat room, and I'm sure for the general public that's watching it. The people, the individual people, and we all know them. I was married to a Jew, so fuck off if you want to get fucking Zionistic or whatever the fuck anti-Semite with me. Wipe the fucking government and the fucking people in power over there off the goddamn fucking map. You did it to Pablo Escobar. You did it to fucking Chavez and fucking, you did it over there over in, just get fucking rid of them. Just because they got dirty shit on you and they've been controlling the United States, and whether or not you want to believe they were the ones who did 9/11, it's completely fucking up to you. But get them off the fucking map and get rid of this shit, because they're a bunch of fucking cunts. And that's about the rant that I've got, because I actually want to hit you with something serious. And although I do kind of joke around and throw in some clips, make people laugh, I'm not laughing about this. I'm not. And this has been something that has been with me for the better part of 30 years. Back when I was a CPA, it didn't take me long for this to really click, and I jumped off the bus. And as I've progressed through life, and many of you know, I've taken my risks and I'm benefiting for it. This is something that I've shared with a couple of you. And it's completely up to you what you do with it. I don't want to start there. In 1978, that was the first implementation of the 401k plan. Okay? In 1974 was when they introduced IRAs. They made popular with the Economic Recovery Tax Act of 1981. As some of you may remember, there was a lot of strikes that were happening. There were some bankruptcies that were taking place. These two vehicles are fucked. They have been fucked for 30 years, and it was just a matter of when is the actual, okay, now they're fucked. And you're here. And what I mean by this is people who are already at 60, having financed all of the retirement that has taken place with, as many of you know, Social Security will be running out in a very short period of time. The U.S. national debt is above 35 trillion now. These will not exist. Number one, when you under 60-year-olds, under 58-year-olds get to 65, they will not exist. That's number one. Number two, fucking stock market will not be a fraction of what it is now. So even having your money in there is not going to fucking exist. So you do what you want. I was a CPA. I fucking don't fall under your rules anymore. I haven't for better part of 20 years. But you need to seriously sit down there and look at what we do And look at what it's going to penalize. Good fucking word they use. If you want your money, you're going to get a penalty. And really consider whether or not these 400, 100, 400, 150, 100, 150, 150, 125, percent returns just throwing out there daily. If there's any benefit whatsoever for you to be able to have control of your own money so that when this does happen, it ain't gone. You can read an article here, Brief History of the 401k, which changed how Americans retire. It was printed back on January of 2017. And read through it, how even the guys who created it said it was a fucking mistake. So, again, do what you want. I'm not going to rant too much more about that, and I'm going to start getting us into where we are. So here, first and foremost, August. We started out at 55.37.84 2 days ago. We dropped down to 53.02 on Friday. We have produced a 249-point range for the month of August. So just right there alone, you've pretty much eaten up most of August. Pretty much. Get yourself where I'm going to have to expand this again, and I hate doing it, but it doesn't really matter. Unhide rows, and now we'll start scrolling up. Okay, here, your extremely bullish 5 rate cuts are coming in 2024, November, 390 points for the month of November. Bullish. The Israel invades Gaza bottom of October 27th after that massive sell-off of 2023. 289 points over there in October. 302 points in September. August, the first of the 3 red months in a row, 249 points. Then you look at your July, 222, 286, 182. I don't think I have it, but I'm going to scroll just in case I do. Because like I said, I don't think I have it. Here, October of 2022. The massive, humongous, fucking enormous sell-off was a 414 point range month. 535 points in September, and everybody knows the momentum that was going into September. August, 370. 418 back in July. 540. And again, these massive well above fucking 25, 30 VIXs that we were trading at the time. And we had big, humongous months. 480. We had 703. I don't know what this is, but 480 for the month of February. 596 when we first dropped in January. They're big months. I don't really see us into that level right now. In fact, I'll go over it, but it's definitely starting. And I'm not the only one out there talking about that it is definitely starting. The bulls, and you can go out and look around, free services, pay services. This isn't something to joke around about. And I'll show you why. Again, over here on the spreads, intraday, fantastic. 400% there on the 5330, Sweet Home Alabama. SPX Nancy, I know that she took the 52.95, 52 or 5300s, got $3. There's money there. And again, you guys that have been around and have followed the channel, like, subscribe if you want, whatever. If YouTube's going to bump me up so more people see it, I don't really care. I'm not a put credit spread person. I'm not, because of the risks that I know of how quickly things can escalate. I'm throwing out put credit spreads because we are in the process of placing a bottom. If we have not already placed our bottom there on Friday. Questionable. QQQ. I'll go back to SPX quickly. 3, 1, 2, 3, 3 red weeks in a row. You're really, really taking chances against this algorithm, the market, everything you want to put together about it to be expecting that fourth red week in a row. Highlight that going on to the QQQ. QQQ, 4 red weeks in a row. And again, I've preached for months and months and months, years even. Everything is inside the QQQ, everything. And what I saw on Friday was it was not selling off. Apple, nothing. Google, nothing. Microsoft, nothing. Fucking Spotify is still at 330. Got Nvidia holding 107 by the skin of its teeth. AMD is a complete piece of garbage, but still, it's holding there in that low 140 area, 130s. Amazon, yes, took a big hit on earnings, not selling off. So the point that I'm making for you here is yes, we are in the process of placing a bottom, but what that bottom is a completely different story. And again, over here on the IWM, 3 green weeks in a row, bam, we got a red week. What we got on the IWM, and it came all basically there on Thursday and Friday, was a lot of people that were worried and scared about that August 16th IWM 207 puts trade because of that bullshit move made on CPI back in July. Well, that's the reason why I pick further out dates, because I know there's a 98% success rate when I am throwing these trades out. So I had a couple of things that I wanted to go over, but I will quickly leave you here before a lot of people move off into their own little world because they just can't put the attention together for it. On Thursday, I gave you the August monthly candle on the SPX. As soon as we opened up, we had the candle 55.3784. This, if you want to go and check in the spread room, printed a couple of minutes after the opening bell. 55.40, 55.35 calls, $3 credit. They were 100% on Thursday. So I do not hold it against any of you who took that trade off. None of you whatsoever. So, okay, time to go on to the charts. Nikkei. Listen, the yen carry forward trade. It's been going on for decades. It's actually part of the reason why the U.S. was able to confidently build up to $35 trillion worth of debt, because the yen carry forward trade is much greater than that. And if Japan does not want to become a third world country, they're going to always need to have to support the US dollar, which in turn allows for the US to go ahead and print money. Well, it's a little bit more sophisticated than that. And if you want to spend the time to wrap your head around the yen carry forward trade, I would strongly suggest you're much better off spending time learning how to crochet so that you can make hammocks and you can sell those hammocks on the side of the road, because you will have much better reward for those hammocks than you will trying to get your head around the trigonomics of the trigonomics of what goes on inside of this internal currency war that has created the yen forward trade. And even if it can be dubbed down to you, it's not worth your time and your effort. You got better things to do in your life. But it is fucked. All-time highs on the Nikkei back here on July 10th and down almost 20% as of Friday. So I bring it to the QQQ. And as I was looking at this as a bullish 1, 2, 3, 4, 5, it hasn't broken anything to get out of that. So I'm still leaving it there, but this is an ABC. This is an ABC right down here to the 123.86 extension. You can't see because bigger, more importantly, is this 448.96, 448.99. And we've come to it. We came down to the 23.6 retracement to the 2022 lows on that break. We broke down below the March highs. We closed below the March highs. So we have made some bearish violations that have given the bears control, but it's temporary. Again, looking at this for what it has definitely come down into an area of very, very, very concerning as to whether or not your wife should continue to own Nvidia in a very big position in her portfolio while you do everything in your power to try and tell her, take the money, sell the stock. Same thing if your father has a very large position in Nvidia and you're trying to convince him that he needs to either take his profits or take his losses, because there's a snowball's chance that he's going to be able to get above that 120 level over on Nvidia. A little bit too much time there. Again, on the default, looking at it, ABC still fits better. 123.6 extension right down there, boom, boom, boom. And I'll show you why that means anything. But zooming out, so that you can see a little bit of a broader picture on this, highlighted here in, well, you can't even see it because of the Fibonacci's, but highlighted in yellow, I have my traffic areas. This was our resistance area over here all through February and March. This was our support level when we came down on the dip over here from the April drop, and that's exactly where we came down to. So it's nothing of a serious violation at the moment, but it is something to be concerned about. It's something to definitely be looking as to where do we bounce? Where do we bounce? How long does it take for us to bounce? Because here we are, it is August the 4th. August 19th, you've got your full moon, and August 19th, you also have the week when NVIDIA will be reporting earnings, and there's a plethora of bad news to put on top of their round-tripping scam that is going to say that their earnings are not going to be good. That's going to be coming out in 2 more weeks. As of right now, the dedicated focus for everybody in the short term is where are we right now and where are we going in the next 1 day, in the next 2 days, because nobody really cares about their future. They only care about what they can put in the microwave, what they can get today, tomorrow. And that's a big mistake. So anyway, it does look very clean, ABC, and this being the A wave that is forming, if not already formed. But it doesn't help you. Look back here at last year, July. Last year, July, into Israel invades Gaza a day before, 2 days before, when the NASDAQ bottomed, because the NASDAQ does tend to bottom a little bit earlier than the SPX, 1 day or 2 days. You had an 8.5% drop, 7.5% bounce. Then you got your big drop down here into the bottom, into October. It totaled 11.76% to the downside. We have done, as I shared, 10 days, 15 days, 20 days. 20 days will get it. We've just dropped 12% over here on the QQQ in the course of the last 15, 18 days. 2.5 weeks, 3 weeks. Very similar to what we did last year in July, where we bottomed. What was this? August 18th was when we bottomed. And then we had our bounce, our nice vigorous bounce up here into the end of August. And then your decline began. And again, don't forget, you are in an election year, and election years all have that same big asterisk on top of a regular asterisk, as the regular asterisk being how September into October is always pretty goddamn bearish. Now you are going into an election year where this election year, you will be going into that bearish October bottom prior to the election with a lot more aggressiveness and with a lot more effort that you can put into this, considering default where we have come from and where we have gotten to, and how it is all inside of 8, 7, 9, 10, 11 names. Violate down there below that 423, and we start looking at 350, 340. And I'm talking about going into the elections. Doesn't mean go be a fucking stupid moron and go buy puts on Monday. Like I've said, we're oversold, we're due a bounce. But on the drop after that bounce, 390 without a shadow of a doubt. But we are looking at that 350, 340 area. So anyway, moving on over here into the SPX. SPX here, big gap up over here, left over from when we put in the all-time highs, right into the close over there on July the 11th, I believe is what it was. Okay, July 16th, but whatever. Bang, 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 bang. 6.5% drop. Now, again, if your memory hasn't obliterated it, 12% drop on the QQQ, 6.5% drop on the SPX. Everything is inside the QQQ. We have not broken down below this one tiny little gap, which I will end the video with so you can see what we're talking about with that. We came right down there to that sweet home Alabama 5330 and whoop, just bounced right off of that into the fluttering of a nowhere session on Friday. Friday was absolutely nothing. Come on here, and I screenshot FinViz every day for the past 9 years and keep a copy of every day so that when you have to go back and refer to it, you can. As you see here on Friday, absolutely nothing. Rock you to sleep, nothing. And that's the way it's supposed to be. So anyway, back here onto the SPX again. Bang, 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 bang. We are undoubtedly looking at this. I may be able to have it here or not. An ABC for the A, ABC for the B, and here looking at a possible ABC, but more likely 1, 2, 3, where we are going to be getting a fractionally lower low, somewhere lower, down around that 52.27, 52.50, 52, call it 52.21, possibly getting that lower low to come in, and that will complete this wave A. We've talked about 5200, 5250 for a little bit of time as we got starting to progress in this. Yeah, we should come down into that. And again, going back and doing a little bit of math, not here, but over here, doing a little bit of math with a 250 point range already and 5300 being our bottom. If we did get that extra 50 points, possibly even 100 points lower, we'd be looking at a 300 to 350 point month, and that would more or less suffice everything that we're discussing about monthly counts and monthly ranges. But yes, this does very much look as an ABC with the with the C looking to place itself because we got 3 waves down, 3 waves up. So we should have been followed by a 3-3-5, 1, 2, 3, 4, 5, with 1 and 2 already in, 3 didn't actually hit yet. Well, actually, yeah, 3 did hit. So 3 is in. Looking at a 4, possibly could have been there on Friday. And then a wave 5 to a little bit of a dip lower. And that's it, the end of the wave. Come into it from a technical point of view, which I'll share better off in the email. We have buy divergences that are set up. We've got buy divergences on the 4-hour, on both the SPX and the NDX. Dow Jones, Russell 2000 especially, very oversold on the 4-hour on that drop that it had there on Friday. Dow Jones, show you in a couple of minutes here. So I move on to the other charts again, and that's not what I want to do. I want to start here with the Dow Jones DIA. Again, tracking this off of the April bottom for that being the A wave, this being the B wave that has been formed as we went up and put in a new high. We can do it. I'll cover it in a little bit. We failed that 400 area. That would have been the bullish wave 4 so that we could progress up into what everybody was talking about, which was getting into 5,800, 5,900, maybe even 6,000 on the SPX. And then it was all over. I still disagree with this all over thing for now. I've shared it with a lot of you guys. I still disagree with the all over thing because, again, one of the things that some of you have asked about that's over there on my screens is that whole, here, this coming from Samuel Berner in 1875, periods when to make money. And when you go back and you look back at this and you see what you have, this thing is off by a year, literally. 2019, periods when panics will happen. Well, it happened in 2020 or 2019. Yeah. 2020, just a couple days after it, COVID. 1999, .com. 1981, again, same thing. I actually, if you remember, 1981, I just discussed this when that was when they introduced the IRA. They needed that money in there. 1965, everybody knows. 1945, World War II. 1927, the Great Depression. Come over here and you look at your bottom. So again, it doesn't fit for me. Where even though 2026 is a good place, good times, good place to take some money off the table, 2032, another again good time to get bought in because things are hard. Low prices on stocks. That's in 2032. 2023 worked out pretty fucking good, didn't it? Having bottomed in 2022. 2012, same shit. 2005, again, similarities. 2007, 2012. The IRA and the 401ks, we get here to 2035, they don't exist. Period. They do not exist. They're all gone. So in your 401k and your IRA, you better have a serious think about whether or not this quote unquote penalty for you to get your own money so that Wall Street bankers can't make money off of you by charging you exorbitant fucking fees of putting you into complete fucking crap. Some of you have control and can put it into what you want. You really, seriously, better have a good fucking think about this. So anyway, go back to the charts. Again, I apologize for digressing because I am trying to get the message across. Again, over here on DL, ABC, A, B, this being the C because the 3 is failing, having broken well below the 1, and now starting to infringe on that A wave down here. Again, Dow Jones, very similar. Pull it over. Dow Jones sell off right down to the 50-day moving average, 100-day moving average sitting fractionally below that. Back onto the charts. DIA or IWM. Here's your CPI bullshit gap up back here from July 11th. Almost perfectly to it, filling a couple of gaps along the way on that gap down. One gap up over here to fill. I wish you the greatest of luck if you decide to chase that to the upside. 50-day moving average hit, 100-day moving average sitting inside of that gap, with the 200-day moving average being where the IWM once again goes red on the year. I still think that we do get that gap fill down here to 203.39, and we start pressuring down to the 200 area as we head into another day, another couple of days, but pretty obvious 207 and why 207 matters and why we picked the strike on 207. So, okay, guys, here's where my delivery has to be picture perfect when I discuss this, because some of you just really don't understand how the Elliott wave works and what it is with the Elliott wave. But I'm going to go back here, and unfortunately, I'm going to have to change time frames in order to do this so that you are able to see it and not just have little glitches and numbers out there. And I can't because my numbers are too big. So anyway, I'll go back to the yearly. Super Cycle 1. The beginning of the stock market going into the top, 1926, 27, whatever the fuck it was. And then the 86% drop into the Great Depression, which everybody knows about, even though they don't teach it in school. And most of you under the age of 50, 40 even, think of it as like the boogeyman. That was your Super Cycle 1. That was your Super Cycle 2. Then you had your Cycle 1 going up into the beginning of World War II. Then your Cycle 2 into the end of World War II. From that, you had your 1, 2, 3, 4, boom. Cycle 3 topping out as we hit the dot-com highs. Now I can pull this into a little bit of maybe the monthly will work. We'll see. Yeah. And I only need to go to, bear with me. Bear with me. And we're on the monthly. So anyway, it's not going to work. I will, because it's on the daily. That's why. Monthly. So here we are coming off of this being cycle 3, where the dot-com high peaked. Then from the dot-com highs over there in 2000, you had your A wave down into the 2002 lows, your recovery right back to the dot-com highs for your B wave, and then your C wave finishing off cycle 4. Cycle 4 having bottomed in 2009. We can now move this into a more viewable chart, being here. So from your 2009 bottom, you have your 1, 2. These are your primary 1s and 2s. Then your 1, 2, 3, 4, 5. Long period run over there from 2011, I believe, 2010, up here into. Excuse me, I got something in my throat, and no, it's not a tick. Apologize. Right up here into 2018, Donald Trump. So we can now zoom this in a little bit better. Custom and bring you into 21.7. And we will still stick with the weekly. Here being your Donald Trump high, where we had 351 trading sessions without a minus 2% decline, just like what we recently went through here. You had your A wave down, which was your quick 12-day, 13-day, 12% correction. Your B wave up going to a higher high into September, October, and then your A wave down for the A of that correction. 20% from the all-time highs over here Christmas morning 2018. I remember it very clearly. December 24, December 2016 or 26. From that, in the bounce into the COVID highs, a higher high, still bearish. AB 1, 2, 3, 4, 5. That was your B wave. Then COVID came. That was your 4. From COVID, which most of you are most familiar with now, so we can zoom this in even closer. Your 1, 2, boom. Then your 3 wave into 2022. Your 4 wave having produced here in the bottom of 2022. And what we have been doing for the better part of, call it, 2 years, is doing this final 5th wave of not only where we've come from, but cycle 5. And that cycle 5 also being your super cycle number 3. Super cycle 3, which started back in 1933, call it. Super cycle 2 to super cycle 3. The downside coming on this is going to absolutely obliterate everybody. And I will again say, I do not have this happening now. I don't have it happening now. My time frame continues to be 2-3 years down the road from here when we actually really get started on that. And once again, my personal view on that has Donald Trump winning the election and allowing that to provide for that to occur, where internet stocks are complete garbage and it's more into the brick and butter, or the brick and mortar, the bread and butter of the real shit, exactly like we had in 2017, where we just have a nice, slow paced move to the upside, very much like the bounce that we had after the correction in the beginning of 2018 into where we headed into September of 2018 before the 20% correction. Looking at this again, very clean and objectively, and you can match this up with 95% of other guys who do the same thing. coming off of October of 2022. You got your 1, you got your 2, you got your 3, you got your 4. Your 4 being, and some of you remember this very clearly, we were on the cusp of breaking when Israel invaded Gaza. And boom, off to the races. Coming in, and again, moving into a more zoomed in view so that we can see this. Off of that low, Israel invading Gaza, which is almost the exact same low of when Russia invaded Ukraine, 4105 area. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11. So we have the qualifications of having placed in a top. I could have missed I could have missed a wave here. I could have missed here. So it could be that we are in number 13 at our top. As of right now, this is what it looks like. And this is the chance, the hope that this might be a wave 12 and we might progress upward for a wave 13. That coming to fill these gaps, break the high at 56.45, which is just too fucking perfect, and put in a fractionally higher high, and then it all starts. That's the hope. And hope don't make you money. So I would again stress that where we go, and I've talked about this, I might have it on the other chart. No, I don't. Where we go to, best views, the best view on this, and again, looking at this, okay, I'll bring you in here. Looking at this from a much bigger, broader, wider view, we are looking here at a 1, 2, 3, 4, 5, 6, 7, 8, 9. That's what we're looking at from a wider view. So this wider view strongly suggests that we will have ourselves, again, this is what really fits with me, that we will have ourselves a 10, and after the 10, an 11. And that 11 posting to a new high 2-3 years down the road, that fits into my time frame much, much better before the shit hits the fan. So taking that out of context, or doing whatever the fuck you want to do with it, I really don't care. Coming off of the COVID lows, coming off of the October of 2022 lows, which almost hit the October 2023 lows. I'm not a trend line guy. I've said this 100 times, but yeah, we should progress down into that 4,800, 4,600 area, and that would fit quite exponentially for a nice bullish, bearish B-bounce bottom and push that higher high. Just like I shared with you on how the 2018 drop began, and even though we went into a higher high into COVID, it was still a bearish move to the upside before we got that bigger correction to the downside. Downside, bigger, broader view. Again, here, look at it for however you want to look at it. I really don't care. I made mine. You're the ones who got to hustle and go make yours. You come off your .com or your 2009 lows, and you come down into your big COVID lows. Your trend line comes out here right around to 2,900. When the shit does wind up hitting the fan, that's going to be the trend line that you look for. That's going to be your initial, okay, how far are we going, and how long is it going to take to get there? Because I hate to tell you, but bear markets take a hell of a lot less time than bull markets. So that is where you eventually will wind up going down to, is around that 3,000 spot. Here, again, I still look for this to be 4,800, 4,600 as we go into October. So I will leave you now with the gaps. This being a chart of nothing but the gaps, although I apologize, I did draw on this quite a bit when I was using it, when I was looking at the percentage moves that we were moving to the upside, to the downside back in the beginning. We have a 6.48% dip. We had a 5.91% dip. In red, you have your gaps. In red, you have your gaps. In red, you have your gaps. Now, some of these I need to extend because I didn't, well, I'll clean this all up. But anyway, you can see what we're talking about here. And again, these gaps will get filled. They will. Look at your trend line here that we've got here. This is coming off of the February and April lows of 2018. Again, it all coincides with coming right there back down into the middle low 3600 area. Pull you in here again. Where is it? Real deal. There's your trend line coming right down there into the low 3000s. What does the low 3000s mean? Well, where am I? What am I looking at? Oh, fuck. I don't remember what fucking chart I was on. But yeah, your super cycle is coming down here to around 2800. I can go back to that, I believe. Can I? Yeah, more or less. It's clean enough. Let's go to 10 years so you can see it pretty clean. Here is your 2800. So, no. And again, I'm sharing this in the effort that it is because I understand that a lot of you have 401ks and IRAs, and I understand that a lot of you are still my age. You were all born right around when they invented these things. They're not going to be around. So sit down with your proper CPA, have a discussion with them, give me a call, and I'll give you my 2 cents about it. But paying the penalty, and how long will it take you to recover that penalty when you have full access to your own money? It's up to you. Well, again, it's up to you because no matter what you want, no matter what you think, you're not going to change the cycles. You're not. Period. The end. You are not going to change the cycles. And this cycle, once I said, which has begun way back here, years and years and years and years and years ago, before your parents were even born, you're fucked. So either deal with it or take control of it. Last thing I'll leave you off here is the VIX. The VIX, the VIX, the VIX, the VIX. The VIX, big move, bang, 2884. Yeah, that's it. So you did crush the VIX on Friday, although it doesn't appear that you crushed the VIX, but you did crush the VIX on Friday. And considering that where you've come from and how we have progressed up here into this VIX, actually, yeah, I'll just look at a 5-day. Zoom me out. Yeah. Once we get that VIX down below 2102 and we still get a lower low on the SPX, if it comes, but we have a lower high on the VIX, that's when you get your first decline. But not pretty picture perfect. 2884 coming up there, getting hit back down below 2371. Get this below 2102 and you can start being confident that yes, we have placed in our low, and what we're going to be looking for is we're going to be looking for a move to the upside into August 19th. So there you go. There you have it. I hope you enjoy yourselves. I'm not trying to tell everybody that, oh my God, you are fucked. But yeah, you pretty much down the road, that's what's coming to you. And there's nothing that you can do to avoid it. You can't change religions. You can't go and change jobs. There's nothing you can do to avoid it. It is going to be coming. And that's why I'm happily living in, very peaceful place, which will not be impacted by all of that. I lived through 2008 over here. All I had to do was pay an extra couple of cents for a hamburger, which is still the same price of what it was from back in 2008. So enjoy yourselves. Have a beautiful Sunday. Don't watch too many guys with their dicks knocking the pole off on the pole vault or dudes beating up chicks in boxing over there on the Olympics. And I wish you the greatest and greatest and greatest of weekends, although I understand that it's really hot for you. And anyway, I've spoken too long, and this is well above my pay grade. So enjoy yourself. Have a beautiful morning, and futures will be open up in 30 minutes, which I might have the video out by then.
No, 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 no.